All right, using the ICT teachings that I'm learning for the first time last couple of weeks, I want to examine using the fair value gap strategy and the high and low of the previous day. And that's what I've been testing over and over, and it seems to be very valid as a strategy. So let's just take this particular day here, November 15th. November 15th, 2023, you can see the previous candle closed strong, and the high was marked by this white line. Here in the circle is the day we're interested in examining on the 5-minute and the 1-minute chart. You can see that the price went up over the previous day's high, came back down and closed below the previous day's high, and ended up in this kind of gravestone doji-like looking candle. All right, so what happened on the 5-minute and the 1-minute chart? Let's take a look at this. All right, here is the previous high of day, right here. And price began to create bearish tendencies underneath it right here. This is the 5-minute. And in these circles, you cannot see them on the 5-minute chart, but you can see them on the 1-minute chart. There's what's called a breaker block. Okay, and we're going to show you that. I looked at a bigger breaker block here, and that's what this line right here is. Breaker blocks and fair value gaps is what we're examining as strategies in light of the previous day's high and low. We're looking to go long on breaker blocks that are above the previous day's high. We're looking to go short on breaker blocks and fair value gaps when they form when price goes below the previous day's high. Okay, so again, this is the 5-minute chart. This is the previous day's high. Here is the tendency. Using the 5-minute and the 1-minute together, you can actually see the details of these candles developing. What's a breaker block? Well, I'm just learning it myself, but it's a pattern where price creates lower lows and higher highs and eventually breaks with displacement. And here you can kind of see the pattern taking shape. It looks different all the time, but it's got the same elements where it'll, for a bearish, it'll create a low, come up and make a higher high, and then make a lower low, creating displacement. And see, in this area right here, we did not get a fair value gap. It says no fair value gap to short. And a lot of times what will happen is it'll create space between the candles, like right here. Between the third and first and third candle, there's an empty space where there's just one candle, no wicks coming in between each one, right? Over here, all these candles that went down, there's no space like that. There's nowhere to short. So the next leg down did penetrate past this pivot here, okay? And it could be drawn this way, actually. I just thought about that. Maybe we could draw it like this, where we're seeing the breaker come down like this, where the high part does come over the previous high and makes a low. But this is not the low that we should be studying, because here's the breaker block now that we've readjusted it. And here is the fair value gap that we can see that we short. What happens in a fair value gap if we got the direction right? If we have the direction right. Here's the previous day's high. Price is falling below the previous day's high. We see a breaker block pattern. We see a fair value gap. That's everything we need to take a short. All right. There's other elements we could use as variables like SMTs and different things that we could calculate, volume and whatever else you want to throw in the pot and say, oh, these are all confluences agreeing with this thesis. But using just the breaker block, the previous day high and low, and the fair value gap, just those three elements gives us a pretty reliable short right here. Stop loss above the fair value gap. And as soon as we enter in anywhere on these candles, we got at least a 2 or 3 to 1 till it starts to reverse. It may be a break-even trade, but you certainly shouldn't lose on that, because you'll drag your stop down to break even as it continues to profit on this little push right here. All right, so this is the 1-minute chart. Now, like I said, on the 5-minute chart, all we can see is these patterns here. All we really see is red taking out green underneath the previous high of day, right? Which is still good for some people. They would short that green taking out red, red taking out green falling below the previous day's high is a signal for some trading systems, right? And here we have red ticking out green again as it tests the previous high of day here. So there's two areas that on some systems, when price falls below previous high of day, it would test and continue to go down. So this is not even really an ICT strategy, but you can see it works with other strategies. When we're looking at the ITC strategy, we're looking for breaker block. We're looking for patterns like this one right here. Now the second one's more clear. When it came up to test, you can see the breaker block a little bit better. What it does, it puts in a high, it puts in a low, it puts in a higher high, one last higher high, and then it breaks. And on this one, you can see the fair value gap is clearly made. Price came up to test it and sold off. And if you don't know what fair value gaps are and you don't know what breaker blocks are, learn those two things. Study those two things, because this is all I'm going to start implementing on my strategy now. I have studied many days. I'm going to continue to study. I've got all these different days here that I went and back tested. All these different days I back tested this. And this is not very many yet. I'm planning on doing 100 days. And I think we're up to 15 or something like that. And so far, what I'm seeing is worth reporting and worth focusing on. Okay, so this is the 1 minute chart. Sometimes you can't see things that you need to see on the 5 minute chart. So it's best really to use the 5 minute chart and the 1 minute chart together. And I haven't used the 15 or the hour on this. I'm just using the simple day, high of the day, low of the day. Where's price at in relation to the previous high and low of the day? Is it above? Should we be looking for patterns, fair value gaps, breaker blocks that point us in the upward direction? Now see, if all of this occurred, if these patterns occurred above the breaker previous high of day, if it came down and swept underneath and came up and formed a fair value gap going that way, then we'd be talking about going long. But we're not talking about going long because price formed those patterns underneath the previous high of day and give us a short opportunity. So I hope that makes sense. I'm going to keep making videos like this. I have a lot of different strategies I like to test on this channel. I have a lot of different, triggers and setups and things that I'm experimenting with. But this one seems to be a really good thing to focus on for a while. I'm going to try to stick to something because I've been going from strategy to strategy to strategy for so long that, I need to really settle down now and make something my own and really master it. So I like this, and I hope that I can master this particular strategy. All right, we'll see you on the next video. Peace.